Good morning, good afternoon, and good evening, wherever you are. My name is Diana, and I am the head of research and sustainability at the Global Blockchain Business Council. It's my pleasure today to welcome you to our GBBC Virtual Members Forum on CBDCs, Policy and Legal Considerations. This is a bi-weekly webinar showcasing the innovative work of our members around the world. And today, we are joined by Jack Hardman, Diego Ballon Ossio, who are partners at Clifford Chance, and also Alisa DiCaprio, chief economist at R3. Briefly, before we begin, I would like to introduce the speakers. Alisa DiCaprio is a chief economist at blockchain technology firm R3, based in New York. In this role, she oversees R3's research and market intelligence functions. This includes providing economic analysis on developments on blockchain, digital assets, and CBDCs, trade and payments, as well as contributing to R3's interactions with the public sector. And she has substantial experience in both public and private sectors, especially on trade promotion, labor issues, and designing and implementing development projects. Jack Hardman specializes in technology and financial services, having significant experience in Clifford Chance's London and Dubai teams, where he's focused the majority of his work on M&A for financial institutions and technology companies. Jack also leads the financial services, regulatory, and fintech practices for Clifford Chance in the Middle East, having advised local and international financial services and technology companies, as well as regional regulators for several years. And Diego is one of the partners spearheading Clifford Chance's fintech and digital assets offerings out of London. His broad regulatory practice spans the entire spectrum of non-contentious financial services regulation, covering trading, custody, settlement of traditional investments and digital assets, as well as strategic advice to regulatory authorities on the design and development of new regulatory frameworks. So in their presentation, Clifford Chance's Diego Ballon Ossio, Jack Hardman, alongside R3's Alisa DiCaprio, will offer insights on how CBDCs can contribute to broader economic objectives, including the impact of CBDCs on financial stability, their potential role in promoting financial inclusion, and the legal structures necessary for successful CBDC deployments. We welcome your questions at any point during today's presentation from the audience. So please go ahead and submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. So once again, thank you to Jack, Diego, and Alisa for joining us. I will now hand things over for you to begin, starting with the question of central banks issue money all the time. Why do we need lawyers and economists to issue CBDCs?
I'm going to grab that question as the economist on this panel. I think this is a really engaging question to start with because it acknowledges the involvement of the entire ecosystem in this CBDC adventure that we're all on. I think from the economics point of view, there's actually two different parts of this question. So the first is like, what are economists doing in the tech sector in the first place? And this kind of gets to the question of, or the observation that economist roles in the tech sector have been expanding for maybe the past 7 years. And we do everything from kind of business economics, how should you price your products? Where do they sit in the market, to running research labs, which is really, what does the future of this sector look like? So that's the first part of this question. That's what do we do? What are we doing in tech? And then the second is, what is the involvement in CBDC? And this gets to the observation that central banks are filled with economists already. So why do they need, what can a tech economist add? And I think there's really kind of two specific roles that we've played with our partners in the CBDC space. And the first is to provide a reality check, right? DLT can do a lot, but it's not magic. And so there's some things that a casual observer might assume that is possible, like say tracking a CBDC as it moves around the world, but that actually has policy constraints and legal constraints that make it not really feasible from a technology perspective. And then the second role that an economist would play in this kind of project is really to guide the discussion about what policies might need to change if you do issue a central bank digital currency. So this is more of a bridging role where any central bank has many different departments, and if my experience at Asian Development Bank is any indication, they don't necessarily talk to each other or participate in the same projects with the same degree of enthusiasm or integration. So what we're really doing there is kind of running these big working groups that bring in all different parts of the bank together to really think about what needs to change. Is it the way that we are accounting for this in internal systems? Is it the policies around merchant adoption? What kind of design features are most likely to maintain financial stability? So, kind of closing this off, central bankers can answer all these questions themselves, but they also have day jobs. And so that's where we kind of come in as a way of supplementing their knowledge and sort of providing this bridging function. So maybe I'll turn it over to Diego and Jack to kind of talk about what are the lawyers doing in all of this.
Sure. And it's really interesting what you said, Alisa, around what economists, sort of external economists, add to the mix, because like in your case, central banks are normally filled with lawyers. There are lots of central bank lawyers that operate in central banks. I suppose external law firms can bring a sense check in the same way that you were talking about, and it's all about legal certainty, and it's legal certainty at various levels that we need to sort of consider from a legal perspective. The point about the legal certainty is not so much to get lawyers happy that it's all nicely done and all the T's are crossed and all the I's are dotted. The reason for it is that legal certainty enables businesses to operate in a frictionless way. And ultimately what we want is, any form of money to be able to be transferable and to work in a way that facilitates more business activity, more payments, more economic activity. And, lawyers are there in order to try and bring a degree of legal certainty to the extent that that's needed. And we look at normally at three levels of that. There is, on the one hand, you've got sort of the question at the very basic central bank level, which says, right, what are the powers of the central bank? Can it issue a new type of currency? And that question alone sometimes is a tricky question, because so far we've seen currencies being defined sometimes in legislation as, coins and notes. And so, under which of those categories would CBDCs fall under? Probably under none of them. And so the question is, well, what does that mean? Do we have to create a third category? Do we have to amend the law? Just that one question sort of brings up quite a big legal process, which is a legislative amendment to the basic law of the central bank of a particular jurisdiction. And if you go further, once you've established, right, so there is the right, or we would need to change the law for there to be the right to issue CBDCs. The next question that you then come up against is, how would this work? Is it the same as what we do in the normal course of things, or do we have to treat this new type of currency as something different? For example, would we have to park some of the existing cash in some sort of account and remove it from circulation in order for us to be able to issue this CBDC? Or can we just layer this CBDC as an additional, type of currency that flows into the wider economy? What's the power? What's the governance around that? What needs to be changed? Who do we need to speak to? What's the economist's analysis? But all of that sort of flows into that, is it possible for the central bank to start issuing these CBDCs? And what's the role of the central bank? And to what extent would it have powers in respect of the CBDCs? I think the point that you made around the technology is really interesting because, of course, with this new technology, technically there are more things that the central bank could do. And so the question is, if you compare the role of a central bank with what it's doing today, should the central bank with the new technology start doing more things? Would it be legal? Would it be legal for a central bank to start tracking payments in a particular jurisdiction if it wanted to? And, I was withdrawing from the question of policy because, many people will say absolutely it shouldn't because it doesn't do it today. But, technically there is a possibility that you could track some of those payments to a certain degree. And so, what's the role there? Or how do you limit that power? Just, legally, would you have to impose a restriction on the central bank that you would otherwise not need because of this new technology? So that's sort of the type of legal analysis that you have to consider when you talk about at central bank level. Then you've got the second level, which is the distribution level. Well, I call it the distribution level. And that's basically what regulated financial institutions need to do in respect of the existing framework. And do we need changes to that? Do we need a new framework for the distribution of CBDCs? At the moment, we sort of operate on the basis that, commercial bank money is a liability against the bank that gets sort of transmitted between banks, and there is a debt claim by the ultimate account holders that deal with that represents that liability. And everybody trusts the banking system because there's some sort of investor protection or retail protection, and people sort of ultimately take some form of credit risk against the bank, which is then reduced because it's either protected by some deposit of protection or some other legislative measure. With CBDCs, the position is potentially quite different, where the CBDC is a direct sort of liability against the central bank, and so the risk levels are different. And so then the questions that you need to ask is, what's the regulatory framework, the right regulatory framework to achieve a proper distribution and to reap all the benefits of the CBDC? Should you intermediate the CBDC? Should the CBDC somehow be held directly? What do you need to put in place? What are the obligations on banks? And, do you have to force banks to start opening up CBDC wallets or accounts for their customers, because they may have quite different ideas. They may not want to do that. So, there's a whole legal analysis around that. And then finally, there is a really important piece, which is the piece around private law. And that's because many laws in jurisdictions tend to sort of talk about money and commercial bank money as the same thing, and they refer to the extinguishing of obligations via payments. And so the question is, would a CBDC, as defined in the new sort of legislative framework, be able to act as a means of satisfying payment obligations? Is that possible? What changes do we need to make? And fundamentally, you bang on against a question, which is, how do you demonstrate that somebody has the CBDC? Because obviously the CBDC is in a wallet, but the wallet, is not been written. The code for that wallet has not been written by the user. It's been written by some company, and that company may directly or indirectly be providing that wallet to the user via some sort of contractual arrangement. So who has the CBDC? Is it the user? Is it the company that's holding it? Is it the bank that's facilitating it? You need a legal fiction that deals with that question. And so, at the very high level for retail CBDC, those are the three things that we would normally talk about. Jack, you've done lots of work on wholesale CBDCs. Do you want to talk us through that?
Sure. Hi, everybody. So I think Diego's covered sort of the retail layer and some of the legal issues that pertain to that. What's perhaps someone's forgotten is that on the wholesale level, the CBDC will have to be issued and used by the banks, either for banking to themselves or whether that's going to be distributed by the banks to retail users. So in a way, these commercial banks who currently integrate with their central bank in terms of holding a current account system, they're going to have to move to how they're going to hold CBDC and get that issued by the central bank. And in most cases, that's not going to be, the central bank is not going to be issuing new currency. It's going to be either converting existing money into CBDC or otherwise in order to issue that. And I think the other sort of fascinating thing we've seen on projects is that the central bank is then going to be, for that purpose, using a DLT, so blockchain platform, which is going to record the ownership of the CBDC. And so it's going to have to create, the sort of very classic central bank core banking system where the banks will hold these current accounts into a system whereby they're going to record ownership of CBDC using a blockchain, which is quite a significant shift actually for, if you think about, central bank ecosystems, and all the banks will then have to integrate with that and engage with it in order to issue get the CBDC issued or transact with other parties. So that whole network will require rules and operative methods in order for the commercial banks to have certainty that they're getting the same thing as if they're getting normal currency from the central bank, and they don't want to have certainty that it can rely upon this platform to accurately record who's holding the CBDC that's being issued, so that the commercial banks can issue and redeem as they need to do to make the system work. The second thing, I think, the wholesale level is thinking about the transfer process. So if we're going to have a system that will allow wholesale banks to transfer large amounts between them in CBDC for whichever function, we can talk about use cases in a bit, that system is going to have a certain amount of integrity. It's going to have to provide for finality in terms of the settlement of transactions between them, so everyone's certain that that system is going to work. And in a way, what we're creating then is similar to a payment system in many ways that needs to, whilst building in that blockchain DLT technology, will also have to satisfy in many systems, and depending obviously on what everyone agrees to, but it may have to satisfy also these international payment system type standards for settlement finality and other things that give effect to payments in the same way as other payment systems, which takes quite a lot of sort of legal architecture to make sure that works both in the system rules but also in the way that the underlying laws respect transactions on that blockchain in the same way as some of the private law issues which Diego was talking about. And then bringing that back to sort of where that sits in the sort of higher level law, we know we're going to have all these new mechanisms that respect transactions in DLT between wholesale banks. We take that back to the banking laws. So then you also need to think about revising those laws to reflect that the holding of money by commercial banks and central banks may be in the form of holding of tokens or other sorts of holdings, which are quite different to how central bank laws describe accounts being held. Also, many central bank laws might talk about how money can transfer between banks and how interbank transfers might work, and the recognition of payment systems. Maybe depending on the system, that law may have to recognise that a DLT platform can be an effective method of transferring ownership in currency when you create a new form of currency, or that you can transfer that currency by transferring the ownership of your CBDC tokens, which is potentially quite a different mechanism. So when you think about the wholesale network, giving certainty to the banks that system is going to give them the same sort of rights as if they were transferring other types of currency does require quite a lot of legal architecture when you think about integrating a DLT platform there. But that's also exciting because once you've got that there, you've got a central bank who's engaging with the DLT platform to allow banks to do transactions. And if you think about building other sorts of use cases around that in terms of other types of digital assets, other types of programmability into that DLT platform, it suddenly gets quite exciting.
Yeah, that's really interesting, Jack. So I think what you're saying, you mentioned the use cases just now. Effectively, it sounds that what we're saying is, we're introducing a new form of currency. It requires planning, and so the planning is fine. But how do we actually go about this? Like, what steps practically do we need to put in place, and how do we achieve the actual design of a CBDC?
Yeah, I think that's key, isn't it? Because the key about design and use cases will be fundamental to ensuring that you bring on board the key stakeholders in the jurisdiction to be successful in adopting it. It couldn't really just be issued and unless it's really for testing purposes, which we've seen some banks do. If the intention is to create something which is going to have mass adoption, which will justify the resource going into creating these, it needs to be driven by something which is going to give you certainty that those stakeholders who you need to operate the system are going to be involved and will want to use CBDC. And who are those? I think that the primary stakeholder, we talked about that, the commercial banks. In many cases, the central bank is not going to be become the only bank in the jurisdiction. It's going to need those commercial banks to hold accounts, do KYC, everything that's involved in the intermediation of distribution of money in the same way as bank accounts work. So you're going to need those commercial banks to come along with you for this to be a success. So to bring those players in, we think that a use case driven program is most likely to be successful, i.e. thinking about how those banks are going to use the CBDC and what's going to drive some value for them in those use cases. And in addition to that, thinking about other types of payment players you want to bring in, the new payment institutions, other types of fintechs who may come in and want to program around the CBDC, what sort of use cases are they going to want to use, and how we're going to bring them into the network to drive value. So we think in any adoption, starting with the banks, working with them as to what sort of use cases are going to be successful in that market. Is that going to be, focusing on facilitating retail payments and working with the banks to create a wallet app that's going to really have that sort of killer impact with the people you want to reach, so they can quickly make payments? Is it going to be thinking about ways that you might want to work with those banks and fintechs to pre-program that CBDC so you can use it so people can make transfer money for certain types of donations, for example, or facilitate government transfers by pre-programming that CBDC to be only used for certain things. In the commercial space, we see maybe those banks, you might want to bring them on board to sort of sponsor a programmability of CBDC so that it can be used for cash management between two commercial banks and work on those B2B payment rails to make that more efficient by a sort of way that one particular bank might adapt that CBDC as another option. And I think that the other type of thing, we touched on this as well, is thinking more about the market's perspective. You've got that DLT platform there where you've got essentially a CBDC which can be used in the same way as a stable coin to facilitate quick transactions in the securities markets. Maybe your incumbent industry would want to use that to create faster transactions in securities by using the CBDC to have an instant payment rail to support digital assets type transactions. These sort of things that are emerging in the market, if you can drive the adoption of CBDC by thinking about how it will support those use cases, including in the sort of legal and regulatory measures that will be introduced for that, such as regulating how you might introduce smart contracts, for example. I think that's perhaps the way that successful adoption might be driven.
Thanks, Jack. Alisa, do you have any thoughts on that?
I have so many thoughts on that. Okay, so I think this is where there's like a little bit of a divergence between the sort of technology and legal infrastructure and what the economists are trying to do here. Because of course, we're thinking about incentives, and the one thing that we can say for certain about this use case approach is that we know almost nothing about consumer and merchant behavior. We can design the use cases, we can design the infrastructure in such a way that it allows certain activities to happen, but we can't require that those activities happen. And so from an economic perspective, the use case design is important, but it also reminds us that we have almost no data from any of the rollouts. And where we do have data, we can see that adoption is extremely low. I mean, it's below 0.2% in every single live issuance country. And so that suggests to us that use cases exist in like a really tricky spot, right? They have to be recognizable enough to a user that they'll have a pretty low learning curve. But then the use case also has to be unique enough that it's going to show value beyond the existing process or beyond what they could already do. So I guess, you know, a lot of times what we've done in the CBDC space is focus on two things. And this is very much driven both by users and stakeholders, which is the first is how do you, through use cases, increase the potential adoption rate? Because 0.2% is an outcome no one wants. So, you know, what we can do is sort of think about different ways to do that. Why would a user want to use it? Why would a wallet provider want to provide wallets? What services can be built around there? So that's really the first part of the use cases that is of great interest for me. The second is really around limiting the disintermediation of existing operators, because of course, and we see this in almost every case, maybe with the exception of China, who kind of went into the CBDC space specifically because of the sort of general market power of private payments operators. But most countries are kind of going into it as another rail that could potentially have a lot of benefits to the existing domestic payment system. Now, this is specifically looking at retail, but of course, you know, we see this in the wholesale space as well. So maybe I'll kind of stop there with my skepticism about the use cases, but the incredible importance of designing them properly, which is why I think there's so much focus on how do you do this.
I mean, that's super interesting because, you know, I think back, if you think in the UK, we had the example of, you know, cashless payment or tapping with the cards. And, you know, that was available for a very long time, but it wasn't adopted until, I think, at some point, the big provider, which was TfL, the Transport for London, adopted it for train rides in London. That was, you know, one of the big catalysts. And I think there is data supporting this, which basically shows that, you know, you needed, you know, somebody in the commercial space to really come on board and act as the, you know, as a use case, if you want. So you have that, you know, big provider, everybody uses the trains in London, everybody uses the transport system. And so if you can pay with that, and it's the speed, right? You want to do it quickly, you don't want to be putting in pins and things, and that was the use case. And all of a sudden people started adopting it, and that led to consumer demand, and it sort of then led to wider adoption. And so, that to me brings to light the fact that you do need to partner with and this is something that Jack was saying, right? You need to partner with the private sector, and you need to be able to develop a system, and this I think is sort of my pet topic, where you need to develop a system that's flexible enough to enable the regulatory and the legal framework to come along and to give you that certainty that merchants and the professional, the private sector needs in order to step in and provide the services. It's no good to have a fantastic use case, but if merchants are unsure that by doing that they are potentially not receiving the money in the way they were expecting, or that the transaction can be reversed, or and so I think from my perspective, what's really important is that you design something which enables a framework where the private sector has the clear idea and is reassured that transactions are going to function in a frictionless way. So, in a way, we're designing a legal framework so that lawyers are not needed, right? We don't want the lawyers to be stepping in throughout. We want lawyers to give the certainty at the start and then hopefully not need them any longer. And I think, that's really powerful. If we can get to that position, that's great. And I think, in that context, we've got various distribution models for CBDCs, which, try to play on that. We've advised on Project Sella, for example, that where intermediaries were not actually holding the CBDC, and we created this legal fiction around, being able to hold CBDCs in a wallet and take the view legally, at least, that the intermediary is not on the hook for those for those funds, which then enables, lots of providers to come in and start acting as distributors without having the regulatory burden of becoming banks, which makes you open up the market and you ideally increase competition and, hopefully make it a better journey for the customer in the long term, and invent new, or you get the private sector to start inventing new use cases as they start learning from the public. So, there are things that can be done in order to expand on this and to enable, I think, the economics to work together with that legal certainty that we need. But your point's fully taken that we don't have the data on CBDCs yet. We've talked about sort of how you do it. We talked about the use cases and what sort of stuff you need to be thinking about. We haven't talked about the aspects of multi-jurisdictional projects, and we've been talking very much in a domestic scenario where you've got a central bank looking at its own country. But obviously, one of the big points that people have been thinking about and that is really attractive, particularly in the wholesale space, is this idea of a multi-jurisdictional CBDC or the uses of CBDCs between countries. Can I come back to you, Alisa, on that? Like, what are your thoughts? Is there any ongoing work on that?
Oh yeah, give me the hard questions. Thanks a lot, Diego. I think, okay, so the cross-border question is a really interesting one because I think there's a jump in regulatory complexity in cross-border use cases, but there's a reduction in technological complexity. Because the cross-border use case, if you're talking about wholesale CBDC, is actually a lot more straightforward than a retail CBDC. It's a lot clearer, what the use cases are, who the different entities are, what their incentives are, how they might behave. So that, in theory, makes this like a much easier prospect. You just make the costs lower, and then everybody will use it. But then when you actually get into it, like, for example, if you try to look for information, which I had kind of talked about earlier, when you're thinking about the use cases, adoption is low. Why is this? Well, if you look at information on cross-border, there's even less. To your point, there's several BIS projects working on this, which are producing papers that are really helpful. If you look at the theoretical literature and in the academic literature, for example, it's almost exclusively on retail. It's almost exclusively focused on large open economies with flexible exchange rates, often the US. And so this really limits our ability to apply those lessons to a cross-border case with a country that maybe doesn't look exactly like the US. So that's certainly been a problematic point in thinking about what are the issues here. I think another issue that you see in the cross-border space is getting back to this increased complexity, because you're talking about more than one jurisdiction. So it's not just one central bank deciding to issue a CBDC and having control over the domestic economy. You're talking about the international space, which is like a little bit more confusing. Is that in the beginning, there is, in general, no regulatory harmonization in these areas. And so you're going to have to start with rule books. And maybe this gets more to your side of the conversation, but from an economic perspective, using rule books, while it can start the project much more quickly, does limit scale. And so this becomes a question of, okay, well, how do we move the sort of international policy closer to a situation where CBDC could be used cross-border with less friction? And if remittances are any indication, this is going to be a very, very long and difficult road. But certainly one, I'm very excited because it seems like central banks are very interested in going down this road. I'm really impressed with the amount of activity and the amount of effort that's going into this. And I think that's where we're moving fastest. So maybe turn it over back to you.
Thanks. Jack, do you want to talk us through, when we talk about these multi-jurisdictional corridors, there are projects like Enbridge that are famous. how do they actually work? Like what happens, and how do you make a CBDC usable in multiple jurisdictions?
Yeah, again, it's interesting to think about the multi-jurisdictional aspects, because a lot of the things we're talking about with the wholesale challenges obviously become challenges cross-border. So you need to have a system whereby both parties have certainty that the transfer of that CBDC between them has the same level of certainty as they would do their correspondent banking rails, in that it doesn't in any way make it a more riskier process to follow. Otherwise, it might inhibit adoption, because ultimately you are looking to replace and improve that sort of correspondent banking network, and so how to do that using CBDC. And the way it's being set up, say if you look at the Embry system, is to have a central hub whereby four or five central banks are coming together and allowing their commercial banks to transfer CBDC cross-border using this central hub. And that the way that needs to work is a central blockchain system whereby each jurisdiction of CBDC is recorded, and the exchange of that CBDC is equally recorded in the same way as other types of DLT network record transfers in digital assets. But what we're doing there is we're creating that sort of digital assets transfer system, and we're creating something that actually central banks and governments are using in the same way as a payment settlement system that that we talked about earlier. So all these issues around, are you going to have settlement finality across each jurisdiction when they make that transfer? Is that going to be recognised? How can people rely on the system to transfer the asset in a way that they expect? Who's going to run that system? How they're going to operate? And there's a natural trade-off there, isn't there, between having that efficient, dynamic DLT-based system as you'd expect for a digital assets platform, but building on that financial infrastructure. And there's a trade-off between how far you go down the road of creating a financial market infrastructure system that looks like a payment system and has all the infrastructure that comes with that, and naturally comes with a cost, an infrastructure, potentially frictions that start to detract from the benefits of a DLT system, versus a more technology only solution which perhaps doesn't have some of those financial infrastructure elements but allows it to be more dynamic and quick, but accepting some of the risks that perhaps will come with that in the system. So I think those are some of the are going to be the levers at play with the international CBDC transfer systems that might emerge.
And do you think that the technology plays a role there in reducing sort of that credit risk and the normal risk that we see in the context of wholesale transactions, payment transactions?
Sure. I think the nature of obviously the DLT system is that it's a truthful record that everyone can rely upon. I think that some of the typical issues around insolvency of a party involved will naturally still be potentially an issue that people have to grapple with. But I think if everyone's accepted that system is going to be the recognition of their transfer, then it will help to facilitate certainty for each of the parties. And I think the key there is to have also that technology being properly integrated with a central bank system which is feeding into that. So if you have an integration between that international platform we talked about and the central bank system that's recording the ownership of that CBDC, then it gives everyone comfort that ultimately their commercial bank is going to respect their central bank, is going to respect the transfers on that CBDC network, and they become to be a bit less concerned about insolvency type issues if you've got the central banks recording that. So I think the technology is key, and how that technology is integrated with the central banks that are running the system will be important to giving that safety and security.
Thank you, Jack. I mean, it's very interesting, because I think ultimately, as you say, we're going to end up in a situation where you need to create trust relationships between jurisdictions for them to be able to collaborate on these systems. Just practically, I think that's one of the things. And you need to remember as well that it's very difficult to enter into binding agreements between jurisdictions, and so what you tend to have is memoranda of understanding or open rule books that are not necessarily enforceable between central banks, and that creates a real interesting dynamic, because it forces central banks to work with those that they can collaborate with and trust, and obviously that may mean that in the future we end up having siloed payment corridors where a few jurisdictions or work with each other and transfer payments with each other, but others just don't collaborate or don't get into that because there is this question around the legal certainty and the trust ultimately. Do you think that that's an issue? I mean, I throw this up to both of you in case you have thoughts.
I feel like that's already an issue today. Like that's exactly what the situation is that we have today, right? Which is why the issue of like remittances is really a problem. And certainly I don't see that being a problem because it's what we have today. So if we rebuild the existing system, that's not particularly useful. As an economist, I wouldn't recommend it, but it's not a disaster. It's not going to like cause a problem. It just won't be efficient. So I think it's really useful that you've brought that up just to remind everybody that like we're not just building another system. The important thing is you're building something that's better. And can we use this as an opportunity to get rid of some of these challenges that we've had for decades or hundreds of years that we haven't been able to solve, and that now if we kind of use technology as the reason, as the kind of catalyst, maybe this is a good subsidiary use of it. It's not directly the technology solving these problems, it's the technology leading to countries acknowledging them and being interested in putting it at the forefront of their policy regimes, which I think is potentially even more important.
Yeah, that your point is well made, because I think you are right. There are existing frictions, and obviously, today a multi-jurisdictional payment is incredibly painful. Anybody who does the remittances thing, depending on where you're sending the money to, can be A, expensive, B, slow, and C, just complicated, right? And so we haven't talked about other forms of money, because I think that's the missing piece to this puzzle in a way, right? We ultimately what we're building is a better system, but not every problem can be solved at once, and I think there will be a combination of payment methods and systems that will work together. So, for example, you could have payment corridors in particular regions, but then those can be supplemented by a stable coin which operates on a different private ledger that does integrate and remove some of the friction. So there are ways of improving without necessarily creating a global network. I mean, looking at the time, we I think we're almost out of time. We wanted to open the floor for questions, and I can see that there are some questions in the chat.
Yes, indeed. And I'm going to come back on and say thank you so much to Diego, Jack, and Alisa for your insightful conversation thus far. I'm Diana, again, Head of Research and Sustainability at GBBC, and I'll be taking questions right now. I think following up on the discussion that you've had right now, one important segue to close this conversation with is maybe to each of you, where do you see the future going for CBDCs, especially if you're talking about a new system? If CBDCs are a new format of money, and what opportunities and responsibilities does this imply for central banks, for individual users, for key stakeholders?
I could take the first shot at this. Okay, so that's a really useful question, because right now it's difficult to see, because you're like, every country is looking at CBDCs, like of course this is the future, but is it, right? So one thing that we can think about is every single central bank that's involved in CBDC is doing it differently. There's not a template or a blueprint right now. I know that BIS and IMF and different multilaterals are trying to, provide this advisory function, because countries are looking for it. But certainly even they are limited because there's just not a lot of examples yet. Some countries are doing retail, some countries are looking at wholesale or cross-border. So I think where we're going to see ourselves in the next couple of years is with an enormous amount of differentiated information that's going to be a lot more useful than what we have today. Because what we have today is a handful of emerging economies that have issued central bank digital currencies, with limited changes to the economy, to the payment system. Is that what we want? Some countries, yes. Some countries, no. Some countries are focused on financial inclusion, others on the expense or the time it takes to do payments. So I'm really optimistic about this, just in terms of like the sheer volume of information that we'll have, that we can make much better decisions going forward once we know what works and what doesn't, and why different banks approach that in the ways that they did.
Jack or Diego, any
I'm happy to come in. I mean, I agree. I agree with what Alisa says. I would say, the way I see the future, and I agree, it's probably not going to be CBDCs in the form that they have been issued yet. I'm quite excited about other technologies that are coming to play, which may actually make the CBDC thing really interesting. So if you think about, the development of generative AI and how that could, be rolled out to this as another layer of technology to operate within CBDCs, I think there is a world where we will have seamless payments, which are, going to be done by your AI because of your behavior. So say, for example, if every day you go and, take the train in a particular way, why do you need to take out your wallet and have to tap? Even that's going to become a thing. If your AI knows that you take the train every day, that you pass the barrier, and that you make a payment every day, it should be possible for it to seamlessly allow you to walk through and make the payment without you having to do all of those things, right? So I think if you can build in some of the AI into the way you behave in your day-to-day life, there will be payments that are just done all the time, and they should become much more seamless. I know that this is a point that people always struggle with, and there are mixed views. There are issues around confidentiality and privacy, and all of those things need to be thought through. But I see a future where that's just going to take over, because ultimately humans are about convenience. I mean, lots of people can, if they can not take out their wallet to tap, they won't. That's what it is.
calling you,
I think
Jack?
I would I'll just conclude that I think, that at a grassroots level, I think that's absolutely right in terms of the way this could adopt. But I also think that introducing CBDCs, we don't know what the winning use cases are going to be yet. We don't know exactly where the biggest penetration is going to be. But I think the big shift for me is moving to have central banks adopting this type of technology, which is vindicating use of sort of DLT-based, blockchain-based transaction of essentially digital assets in the form of currency between that's got that sort of national impact. I think that's going to be such a catalyst for the invention of many different technologies that are going to leverage that or use it or take comfort from the fact that it's being adopted nationally to try other projects to remove friction in society. So I think it could have an incredible impact on technological advancement generally in both in financial services and other types of payments, which obviously we don't know yet, but I think that's going to be moved on quite a lot by the adoption of CBDCs. So I do think it's a catalyst for a great sort of futurization within the industry.
Mhm. And also, we've spoken about the sheer variety of different design considerations, the variety of different kinds of priorities that countries are considering when designing their CBDCs, which range from financial inclusion, like Alisa mentioned, payments or international trade. What should countries consider when prioritizing these design considerations into their respective models of CBDCs, and how can interoperability be a key factor in all of these designs as we lead into I guess long question short, there's a lot of different possibilities for how CBDCs can go. How can we ensure the right levels of interoperability for the benefit of all?
I can get started again, even though I see Diego smiling, so I know he's got something. It makes me nervous. I think in terms of interoperability, that's exactly the right question to be asking. Most central banks are looking at different DLT platforms or non-DLT platforms, so there's that level of interoperability. I think more challenging and more current right now is interoperability between just existing systems. Like the last thing you want to do is have a discussion with a central bank accountant, because you can't ever win that discussion, but that accountant only wants to know how, are you going to have different accounts for the CBDC? Are they going to be the same accounts? Where is the money going to be held? How is it going to be transferred? So the question of interoperability with like your existing operational flows and existing payments systems is an incredibly important one. Where I see CBDC being, kind of getting to the beginning of your question a little bit, being really useful here is, providing in its role as a new payment rail, it can provide a new way of interchange, which could benefit all payments providers, which is really helpful. But certainly that's different for every country. So just to kind of close that off, I think interoperability is critical, and we're seeing that right now and that's only with existing systems. It actually has nothing to do with like other types of CBDC, which I think is a question for the future.
That's great. Thank you for clarifying. Diego, go on.
I was smiling because I didn't want to take the question because I thought it was a really, really difficult question, in the sense that I don't think that any of us can really prescribe, and I think this is what Alisa was saying earlier. There is no common standard at the moment, and everybody's sort of doing what they think is right, and everybody has a slightly different angle. Every jurisdiction is looking at it in light of their, national agenda and national, problems, and those are very different. So the EU, the reasons for creation of a digital euro in the EU are, very clearly, and we've seen this in various statements, all about, sovereignty of their payment systems and creation of a, pan-European payments rail that's owned by Europe. Whereas, the creation of the adoption by El Salvador of Bitcoin is a completely different, right? So you've got various reasons as to why you would do CBDCs, and those are normally driven by the national agenda of a particular jurisdiction. And so, they don't think about the interoperability as of now. They just don't. The position for them is, let's fix our domestic agendas because that's how politics work. And so, from my perspective, your question is a fascinating one, but one that has no answer as such, because we can propose the best models and very, very well thought through reasons as to why a particular model does not work. But we will not change a country's way of adopting it necessarily through that. If it doesn't align with their national agenda and with the politics that exist locally, it would just not make any difference.
Right. Now, one issue that we've been hearing a lot about in the United States, as sometimes these topics get very, very politicized, how do we ensure the right privacy measures, the right security measures are in place, and how can we create the right messaging for the community accordingly?
I think oh, Jack, go ahead.
No, I was just going to say, because it's probably my turn to have a go. I'll have a go at the privacy point and hand it over. And Jacob is better than this than me, but I'll have a go. I think the privacy question is a trade-off between having the right level of privacy to ensure that you know who's transacting in the CBDC, so you have enough oversight to minimise financial crime issues, and maintain any sort of limits that you're going to put on the CBDC usage in the country to make sure if you're going to have limits per user, what those are, etc. To sort of have enough data on that, and also to realise the oversight that the central bank might want to have through this to understand financial transactions and understand the market and realise some of the data benefits through the CBDC platform, as opposed to the sort of the less oversight they obviously have with physical cash. A trade-off between that and the system where if you say, well, actually all your transaction data is going to be given to the central bank and they're going to be all aware of it, you might not want to use your CBDCs. You're going to have a level of privacy that protects that. And obviously principles around GDPR will be very relevant there, as a question asked about, where's the right balance in that framework. In many jurisdictions, the central bank could dictate how we would want to use that data under its own legislation, so it would have the power to overrule certain data rules. So is it going to use that power to get more right to control payment data so it can overturn Eric, or is it going to have a privacy network that's going to assure users they're not going to have their privacy impacted compared to if they just used cash? So I think that's a balance that will have to be struck in every system, and if they don't get that right, I think it could really impact adoption, given the strong sense people have around that privacy and the concern people have that the CBDC could give rise to a bit of a big brother state,
Right.
I like that you actually brought up GDPR, because that, for me, is a good reminder that every country has a different level of what's appropriate privacy and how much privacy or sharing of data users will tolerate or demand. And I really see this variation as a source of innovation, actually, like an important source of innovation, because you're going to have to make different design decisions based on how much your local jurisdiction is going to tolerate. And those might translate, but they might not. In our experience, or in my experience working with central banks, to your point, central banks don't really want data. They don't want to know that you went and spent $2.50 on a coffee, or $5 or $10 or whatever coffee costs. I have no idea anymore. So they don't want that data, but if there's a sanctions violation or AML or CFT problems, they're going to need to pull that information. So I think, where this gets into the technology discussion is you can have a situation where you're not actually tracking that or you're anonymizing it, but you could, if pressed and legally required, sort of uncover it or piece it back together. This is sort of very early days in terms of that discussion, but I think really for me the variation between countries is going to be a driver of innovation. I'm really excited about that.
Any closing thoughts among the three of you? I'll give you a couple of seconds, otherwise we'll close it off. Been a great discussion. Thank you again for joining, Diego, Jack, and Alisa, who represent both Clifford Chance and R3. You joined us today for a very thoughtful and very engaging presentation and Q&A on CBDCs, their impact today, and shared a lot of very thoughtful facts that we can all take away in our respective lives as we think of payments. We really look forward to learning more about your progress as these developments continue. Note to the audience, recording of this presentation will be circulated to all those who registered, and it will also be shared publicly on GBBC's YouTube channel, where we tend to get a fair amount of views. And thank you, and have a great day.
Thanks, everyone.
Thank
Take
you.
care.
Thank you.